Hello, namaste, namaskara. I'm your stock market teacher Matthew, and in this video, which is the second part of how to read charts like a professional, I'm going to teach you how to understand the psychology of the market participants, which will help you in order to buy and sell an asset class or stocks. I'm sure everybody comes to the markets to make profits, and if you are looking to make good profits from the markets, and price action understanding is a requirement. In this video, I'm going to show you how to look at the price action and what should be the inference from the price action. Alright, stock market is not only about making profits, okay? But when you make profits, ensure that you make big profits. Like you see on the screen, Wabag, which I bought at 43%, and I'm still holding. Rosary Biotech I bought, and I'm still holding with 17% profit. But it will include also the small losses, because that's how the business runs, and stock market is a business. So I request you to watch this video until the end, because there is an important information that I'm sharing with you, which I have gained over 14 years of my trading experience. So let's begin and let's understand how the price action works on the charts. If you have not seen the part 1 of this video, I request you all to please do watch part 1 of this video. I have a beginner's guide also in this video. I have a success to profitability in the stock market video also. Please watch those videos, and if you do like these videos, please like, comment, share it with your friends and family, subscribe to my channel, and do not forget to hit on the bell icon, which is the notification, and whenever I upload a new video, it will come straight to you in a jiffy. Alright, let's begin and understand what's the price action and how do I know what is happening in the market. Now, to understand that, first let me tell you, there are two characters in the markets, alright? I'm sure most of you know it. Those of you who do not know it, they are referred to as bulls and bears. Now, who are bulls and who are bears? Okay, in simple terms, bulls are the one who expect the stock price or an asset class to move up. Bears are the one who expect the stock price or an asset class to go down. Alright? Without these two parties in the market, the stock market cannot exist. So, in the stock market, in the capital market, these two parties, these two characters are always head on. Okay, they are always head on. And ultimately, as you know, it is a fight between the bulls and the bears. There has to be a winner. Okay, when you understand what is happening in regards to the price action, you will be able to understand who is the winner, and you need to trade in the direction of those two parties. Okay, if the bulls win, you should know what has to be done. If the bears win, you should know what has to be done. Okay, and in the markets, you know, there are two ways to make money and lose money as well. If you're losing, keep it small. If you're making money, keep it big. That's the simple way to create wealth in the markets. And what are the ways? One is going long, that is you buy first and then sell later. The other one is going short, which is sell first and buy later. Right, there are two ways. I can make a longer video on this one, best to give you a small note and update on this. This is how you can make money in the market. One is by going long, that is buy first and sell later. The other one is by going short, that is sell first and buy later. Right, so it is very important to understand when I have to go long and when I have to go short. So who helps us? It is helped us. It is of much help to us when you understand the price action that is happening on this price chart. You see a price going up, you see a price going down, and it's all about understanding what is happening in the price action. In my last video, I helped you all understand how the price action gets constructed on different time frames. There are many time frames, and whichever time frame you are looking to trade, the candlestick pattern, these are known as candlesticks, they get constructed depending on that price action. And the 4 price points that we need in this price action is for the construction of the candlestick is open, high, low and close. Without these 4 price points we cannot construct a candlestick. And once we have 4 price points, just to refresh all, you know how does the candlestick look. It could have a long rectangular body with an upper wick or upper shadow, lower wick or lower shadow. It could have a square shaped body with an upper wick and at the lower wick. It may not have a body as well. It all depends on the market forces, how the body gets constructed, how the wicks get constructed. Alright, and depending on the close, you know, it's a green color candlestick, and depending on the close, it's like, you know, what's going to be a red color candlestick. Alright, so this is what we understood in the last video. In the continuation video, in today's video, I am teaching you all what does these mean, what does the price action mean to us. Alright, why there is up and down flow, okay, why there is, you know, the price is not moving anywhere. Alright, so let's understand what does this price action mean, okay, because the whole part of the candlestick, that is from the high point to the low point including the body, it is called as a trading range, right? So these reference point means something to us, and we are going to look in today's video what this reference points means. All right, now let me draw a candlestick and let me show you an example, okay? But remember, it's always the fight between the bulls and the bears, and once you understand the fight between the bulls and the bears, once you understand who is winning, ultimately you are going to take a trade in that particular direction, right, in the market force that is presently available in the chart. Okay, so it's market forces will help you determine what's the psychology through the price action, and the price chart that we are using is called as the Japanese candlestick. Okay, these price charts are called as a Japanese candlestick. So let's begin. Let's see what we are looking in today's video. Now, for example, okay, say for example, a candlestick, okay, take any time frame if you like, gets formed like this, okay, gets formed like this on the chart. All right, let's say this is happening on a daily time frame. Okay, now you know, if you have seen my previous video, you know what is the meaning of time frame. So this is a daily time frame. That means the price, the time that is taken into consideration for construction of this candlestick is 9:15 to 3:30 p.m. Okay, so this is the time that is considered for open, high, low and close, and accordingly I have this candlestick which is formed. Okay, this candlestick which is formed, and once this candlestick is formed, okay, it is not only about the high, the low and the open and the close, okay, that is important. Once you start to know what these market participants are trying to tell us through this price action, it makes it easy for you to take a trade, because there is a lot of ambiguity, there is a lot of noise in the markets if you see, and usually it is a lot of confusion for the retail market participant. What I should be doing now? Should I be buying it? Should I be selling it? Should I be shorting it? Or should I be sitting on the sideline? So this is how the price action comes in handy. Now let me give a price to this particular candlestick. Okay, let's say for example this is 850. That means the high point that this candlestick reached in a daily time frame on this particular day was 850. All right, and it closed at 800. All right, and we will mark this open and low at, say for example, 790. Okay, now since the open and the low is same, you know that there will not be a lower wick, so there is no lower wick for this candlestick. So 790 is the open and low, close is the 800, and 850 is the high price. All right, now say for example this stock, all right, this particular asset class opened at 790 at what time? That is the daily time frame, 9:15 a.m. Okay, after opening at 790, the low itself was 790. That means there was not enough selling here. Okay, there is not enough selling below this price point. Okay, below this price point there was not much selling, so the 790 was also the low, so open and the low is the same, there is no lower rate. Now after that, anything could have happened in the markets between this particular time frame, that is 9:15 to 3:30 p.m. Say after opening at 790, all right, this price made a high. Okay, it keeps going up, 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 going up. All right, and after reaching a certain price level, okay, after reaching a certain price level, okay, in this the price point, say 850, it reached a high. Now you should understand, okay, it's very important for a technical analyst to understand why is this price going up. Now why did this price went up? Why did this price went up? Because there was a lot of buying interest in this particular stock or the asset class. That means there was demand, right? There was demand, so there was a bid coming in at higher and higher and higher and higher prices. That's why there was a lot of demand. Okay, after going up, okay, after reaching 850 levels, all right, what happened to this price action? Okay, it did not sustain. Okay, it did not sustain. Now how did I know that it did not sustain? You see this has, okay, you see the close. Now you need the closing price out of the open, high, low and close. In my last video I mentioned closing price is very important, okay, in the color coding as well as the price action analysis also. So if you see the closing price, you see this distance between the close and the high, okay, it's vast, right? It's vast. So after going up, this demand or this buying interest did not sustain. That means what? After reaching a certain price level, there were not enough buyers to keep this momentum at the high level. That means there were not enough buyers coming in at a high price. Okay, when there are not enough buying happening at a high price level, what will happen to the stock price or to that asset class? Definitely it will start to come down. Okay, definitely it will start to come down. So now after reaching this 850 level, this stock price started to again go down, 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 and it closed here at 800 level. Okay, it closed here at 800 level. Now why did this close at 800 level here? Why did it go down? Here this was buying interest, that's why it went up. But here what happened? It was the selling pressure. Okay, this was the selling pressure here which made the stock price to go down from 850 level, right? If there was a buying pressure still intact, do you think this price level would have gone down? No, because there was not much buying pressure. Whatever buying pressure that came in, it did not sustain. When that buying pressure does not sustain, what happens? The selling takes over. Okay, large number of sellers come into the market and they start to push the price down. Okay, as the prices are getting pushed down, there is not much buying interest happening. So what you will see ultimately you will see the close happening at the lower levels. Okay, the close happening at the lower levels. Now since the close being above the open, you know it's a green color candlestick. Okay, but remember, green color candlestick does not always mean that it's good, you should go and buy. No, you have to understand the whole psychology that is present in the markets through this candlestick. What happened here? Even though it's a green color candlestick, the buying pressure could not sustain up, the selling pressure took over, the price closed at the lower end. So now who won at the end of the day, at the end of 3:30 p.m.? Definitely not the bulls, it is the bears who won this battle. Okay, it's the bears who won this battle here. Okay, it does not mean you immediately go and short. You understand the price action first. Okay, later on I'll make another video, okay, wherein I'll tell you when you have to go and take that particular trade. Okay, it's very important. So now who won this? Even though this is candlestick color green, it is the bears who won it because it was a selling pressure. So when you know a candlestick is forming like this and price action shows you that's the selling pressure, will you go and buy it? Definitely not, right? So what will you do? You will stay away from buying. Okay, you will stay away from buying, you will sit on the sidelines. Okay, you will sit on the sidelines here. Right, so this is one example of how the candlestick got constructed and what was the price action. Let me take a new page here and let me do another candlestick for you. Okay, let me do another candlestick for you. Now you see here this candlestick. Okay, let me draw the upper wick and the lower wick. So it's got a long range. Okay, that's a long range. Now let me mark the open and the close. Say for example the open is 500. Okay, close is 575. Okay, high is say 578. All right, the low point is say for example 499. All right, now what's the color of this candlestick? Okay, to understand, I should be referring the close price to the open price. The close price is above the open price, so it's a green color candlestick. Okay, it's a green color candlestick here, right? So closing is above the opening price. Now let's understand the price action. Okay, now let's understand the price action. Now what do I mean by let's understand the price action? Who won between the bulls and the bears? Okay, that is understanding of the price action. Who won between the bulls and the bears? So how do I know that? I have to understand the price action. So this was my open price. Okay, this is my low price. This is my high price, and this is my close price. Okay, open, high, low, and close. Here you have a candlestick construction. Say this is again a daily time frame that I am looking at. See, opening was 500. All right, the low was 499. The high was 578 and the close was 575. Say for example it opened at 9:15 am. Okay, after opening at 9:15 am there was a small drop in the price action. It went to a low of 499. That's why you have a lower bid. After reaching this 499, okay, you see this, it did not go below this, but it started to move up again. Okay, it started to move up again. Why did it move up again? Because there was a buying interest. So after this buying interest, the price went back to 500. For example, it went past this 500 level. Okay, it went past this 500 level. Say for example it went to 501. Okay, it went to 510. Okay, it went to 530. Okay, it went to 550 and it went to 575. Okay, now why did this price go up? Definitely not because of the selling pressure, because of the buying pressure. Okay, because of the buying pressure it went up. Right, this is very important for you to understand. It was a buying pressure. Okay, and after reaching 570 it made even a high of 578 and it closed at 575 at 3:30. Okay, so it closed at 575. Now here if you see, the close is near the high price. The close is near the high price. Okay, and you have a long range green color candlestick here. Long range green color candlestick here. Now what was happening here? You see this price as it was going higher and higher and higher, the buying was sustaining, the buying pressure was intact. Okay, the buying pressure was intact. Market participants were ready to pay this for this particular stock or for this particular equity class, asset class, a higher and higher price. Okay, they were ready to buy it at higher and higher price, and there were enough number of buyers to support this move up. Okay, there were enough number of buyers to support this move up. That is the reason this stock price closed on the higher ground here, at the higher level, very close to the high point. That means the buying interest sustained here. The buying interest sustained here because there was a backup of the buyers at the high levels. Because there was a backup of the buyers at the high level. So who won here on this particular day? It is the bulls, right? It is the bulls who won this on this particular time frame, which is the daily time frame. The bulls won here because the buying at the high level sustained. That means the bulls were stronger. Now compare this candlestick to the previous candlestick which we drew, which looked like this. Okay, which looked like this. The open and the low was here, the close was here, the high was here. Even though this also a green color candlestick, okay, here bulls were not the winners. Who were the winners? It is the bears who were the winners here, because you see the close, it is near to the open and near to the low as well, and it has got a long upper wick. This shows the selling pressure. What this shows? This shows the buying pressure. Okay, this shows the buying pressure. So the bulls won here. Alright, Let's take another example. The more the number of example, it's pretty easier for you to understand. Now let's say the candlestick got formed like this. Okay, this candlestick formed like this. All right, now here I will make this as a red color candlestick. Again I say, don't go by the color of the candlestick. Now you will be able to appreciate what is happening in regards to price action, and you will be able to ultimately tell me, okay, there was a bull who won here, there was a bear who won here. Okay, now this is a red color candlestick. Let me place the price points for you. Let's say this was 90. Okay, this was 90. Okay, this is 100 and this is 105, which is the closing price. All right, this is the open price, this is the low price, and the high also was 105. High also was 105. So you have all the 4 price points and you know what is the price action here. Okay, let me just switch on my charger. All right, there you go. All right, fine. Okay, so now what happened here? Say the price opened at 100. Okay, the price opened at 100 on a particular time frame. Will, for the understanding and to keep it simple, let's keep it as a daily time frame as well. This is your daily time frame candlestick. When it opened at 100, say for example, during the day or at the start of the day, doesn't matter when, the price was pushed down. Okay, why you have a lower wick? Because when you have a low point, you have a lower wick. So the price got pushed down here. Now why did the price went down? Simple, because of the selling pressure, right? Because of the selling pressure, the price went down. So there was a good amount of selling. Okay, I mean there was a selling pressure. Okay, so the price went up. After reaching this 90 level, okay, after reaching this 90 level, okay, it did not go below this level. Okay, now after reaching 90 level, again the buying pressure started. That's why you see this move back up, move back up, move back up, move back up. All right, so because of this buying pressure, this, you see the close, where is it happening? Okay, the close is happening on the higher end. Okay, near the highs. Okay, and near to the open price here. All right, so say after reaching 90, okay, the price jumped to 91. Okay, say 92, 93, 93. As the price was moving higher, okay, who was becoming stronger? The buyers were becoming stronger. Okay, so the selling pressure got negated. All right, and the buying pressure started to increase. Okay, it's not only about buying pressure started to increase. When the close happens, you know that buying pressure increased and that buyers were overwhelming the sellers. That means the buying pressure sustained. It did not die down after that. Okay, so that you come to know by that particular close time. The buying pressure sustained and the close happened near the high and near the open price on the higher level. Alright, even though this is a red color candlestick, okay, even though this is a red color candlestick, it does not matter. What matters is understand, take into account all the 4 price action and see what is happening. So now opened at 100, the selling pressure was there. Okay, that selling pressure got negated by the bulls or the buying pressure and close happened on the higher ground. That means the buying pressure sustained through the end, which is the most important price point, the closing price. The buying pressure sustained through the end. So it was the day for the bulls for that particular time frame. Who won at the end? It was the bulls who won at the end, because there was a buying pressure and that buying pressure sustained. So the bulls won. Even though it's a red color candlestick, does not matter. Okay, the color is of not much importance. It is only to color code or the candlestick. Understanding the price action to know what is the psychology of the market participants, you have to take into account all the 4 price points. So the buying pressure sustained and that's why the bulls won. Okay, that is why the bulls won. Say this is, in technical terms, this is also called as a pin bar. Okay, this is also called as a pin bar. All right, and okay, this is also a pin bar. These both candlesticks are also referred to as pin bar, or also we call this as a hammer, and this one is called as a shooting star. Both have its own influence on the price action, and as a technician I should know what is that influence. Okay, what is the close at the end and how it is working out in the market. Right? let's take a last example. Okay, let's take a last example. Now you will be able to see what is the price action here. Now this is when you get this kind of a price action and this kind of candlestick, when the open and the close are at the same level, you get this price action. So when there is the open and the close at the same level, you do not have a body. Okay, you don't get a body of the candlestick like this, because it will be a flat line since it's open and close is at the same level. Now what could have happened here? Okay, what could have happened here? Say if it could have opened at 100, okay, it would have got to 110. After reaching 110, that is the highest point it reached. Why did it go up to 110? Because it was a buying pressure. Now did it sustain? No, it did not sustain after reaching 110. It got pushed back. Why did it get pushed back? Because there was a selling pressure. It came back down to the opening price and it got pushed further down. Okay, it got pushed further down. Now say for example, it got pushed to 90 levels. Okay, and this was the low it made during that particular time frame. After reaching 90 level, that was the lowest point it reached, and it got pushed back up again. Why did it got pushed back up again? Because of the buying pressure. Okay, because of the buying pressure, the buyers again came back, they got pushed, it got pushed up, and it closed at the same level. Okay, it got closed at the same level, like somebody is playing a ping pong. Okay, so it's like somebody is playing a ping pong, so it got closed at the same level. When the price is getting pushed up and down and opening is closing to the same level, what does the price action tell you? That the buyers are trying to push the price up, the sellers are coming back pushing the price down, the buyers are again coming back into the market, they are trying to push the the stock back up again. So this shows you when the open and close are at the same levels, it is neither the bulls, okay, it is neither the bulls nor the bears who are stronger. Now this candlestick or this kind of price action, we call it as a neutral. Okay, this kind of price action is called as neutral. That means bulls are stronger as well as the bears are stronger, right? So this is what a neutral candlestick looks like. Okay, so this is very simple price action reading. Okay, it's very important for you to understand. If you understand this price action, okay, it's going to be very easy for you to move out of the market and to make money in the markets. Okay, take big rewards. And also it's not only about rewards, I keep telling it. Okay, it's not only about the rewards. If you take a loss, okay, in the market, which is a part of this business, keep the markets small, the losses small. Okay, see, stock market is a business. Okay, and does any business run without cost? No. If the costs are higher, what happens? It hits the profitability. It's as that simple. So our job as a trader and investor is to keep the profits bigger by cutting down on the cost or keeping the cost low. And how do we keep the cost low? By taking small losses and bigger rewards. Okay, and bigger rewards. So I hope this price action understanding is very important. Okay, has shed some light for you. It's going to help you in your chart analysis. Okay, and I do not want to make this video bigger because I want you all to understand this. So what I will do is, there is a last part to this price action, how to read charts like a professional. So I'll come up with a third part here and I will show you where are the trade points that needs to be taken. Okay, where you have to go long, where you have to sell, where you have to go short. Okay, where you have to buy, where you have to sell, where you have to go short. Alright, so if you have liked this video, guys, please subscribe to my channel, hit on the bell notification, the bell icon. You will immediately receive an update whenever I upload videos. Like the video, okay, share it with your friends and family, comment in the comment section, okay, and give it a thumbs up. Alright, thank you. Wait for the next video, that is be the part 3 of how to read a chart like a professional. Thank you.